CNBC TV 18. You're entering CNBC TV 18's Fire Safe Studio, powered by Century Ply, now with firewall technology.
Hey folks, it's Friday and once again we're back with your favorite weekend show, Smart Money. And this week we're going to talk insurance. Now that has been the buzzword ever since the pandemic, and I know we've done several pieces on it, but there's no harm revisiting the basics, right? We have two people who are masters in their craft to tell us what is the protection cover that you need to have for your family, and what are the clever hacks to buy life or even health insurance. Joining me on the show today is Sumit Rai, the MD and CEO of Edelweiss Tokyo Life Insurance, and the very popular Monica Hallan, the author of Let's Talk Money. Lady and gentlemen, thank you so much for joining me. First let's revisit the basics, right? And then we'll talk about how to plan health as well as life insurance. We have many queries pouring in as well. So Sumit, let me just begin with you. We all know very well that India is a really, poorly penetrated market in terms of the insurance industry. There are hardly people that are insured. So tell us about how one should go about it. And how does one approach it specifically in this post-COVID era?
So, yes, Sonia, you're right. As a country, we are poorly penetrated. We have poor penetration when you measure, let's say, insurance premium by GDP. We are one of the poorer ones even in Asia, forget across the world. And even on per capita, premium paid per capita also, we are one of the lower ones across the world. So it is a matter in a country where there is no social security to speak of. Insurance can act as a very vital social security tool for people to plan their, welfare for the future. And it is something that I think India needs to do a little bit more of. I think the one thing that we're seeing with the onset of COVID since the last 1.5 years, and it's not just COVID, we've seen it every time there is a big event of some variety, a big disaster of some variety it happens, is a heightened interest in insurance at this point of time, whether it's health insurance, whether it's life insurance. We're seeing interest everywhere. It's clearly protection has gained momentum. A lot more people are thinking about it. I think events like this bring forth the fact that, we're not immortal. It can happen to us. It is in today's scenario, we've seen so many people who are close, near and dear to us, who have gone through some very horrific times. So I think it has kind of given a little bit of greater urgency in people's mind to look at insurance as a viable option. To my mind, I've always believed that insurance is the fundamental of your, financial planning. Protection is very important. Making sure that your near and dear ones are always taken care of is very important, and insurance plays a very important role alongside doing many other things. I strongly believe that goal-based planning is a very important part that every individual should look at, and insurance, like I said, is the fundamental of that. So, in the last year, as we have seen, especially in the last 6 months, I think there has been a significant jump in interest. We have seen, I think, overall insurance awareness in India is on the rise. We have seen a significant increase in purchase of term insurance, for example, for the last 5-6 years. Overall, the industry has been growing at 12-15%. So, hopefully, some of this doomy statistics of lower penetration and low per capita premium should hopefully change in the next few years.
Sure. Okay, and we have that graph coming up for you, and it's quite disappointing to see India you're very low on that graph, right? I mean, just 2.8% of India's population is insured, and look at the other countries. Taiwan has about 16.5% of their population insured. Life insurance is what I'm talking about. Hong Kong, Singapore all have about, say, 6 to 18%. So we have a long way to go. But Monica Hallan, come in on this. I want you to tell our viewers, how should one approach it? What is more important if you don't have insurance at all? Should one go for life insurance? Should one go for a health cover? What's your advice?
Sonia, insurance is the bedrock of a financial plan. I agree with Sumit that after you've created your emergency fund, the first product you buy is actually insurance, and all investment comes later. And I demarcate insurance and investment. I look at that decision separately. And within insurance, you buy health insurance before you buy life insurance, because life insurance you will use once when you die, if you die. and your family gets the benefit. But a health insurance policy for you and your family is something which has the potential to be used multiple times if and when there is an episode where you require hospitalization. So, first product is medical insurance, and for people with dependents, the second product is life insurance. Both of these are extremely important products. The monkey in the picture is really in the story is really about what kind you buy, what do you look after. But as far as the protection products go, you don't move ahead with 1 rupee of investment till you have secured your savings against a hit when you have to go to the hospital. That's your medical insurance, and for the dependents on you with a very, very high life insurance policy. Sonia.
So, Monica, just to follow up there, you're saying that anyone and everyone should have medical insurance. Of course, we know why, right? With these situations arising, one needs to have that cover. But life insurance, should I buy life insurance only if I have dependents and things like a loan, or should everyone have life insurance as well?
Life insurance,
irrespective of whether you have a loan or not.
That's right. So, Sonia, the pure purpose, like when in medicines you have generics and then you have branded and add-ons and all of that. But if you look at life insurance in its very essence, you're protecting the future income streams of a person whose money runs the house and will look after all the future goals, including retirement. You're protecting that income stream with a life insurance policy. In addition, you're protecting any loans which have been taken. For example, an average house will have a home loan or vehicle loan. You could have personal loans. And if the person in whose name the loans are taken, whose income pays back those EMI dies, then you don't want the family dispossessed of the house, of the car. If you have insured those loans as well, then the insurance policy will pay off the creditor and the family gets to keep the assets. Plus, with the money which comes in for that life which is no longer there, that corpus ideally should be enough to run the house the way it was for the rest of the years of the surviving spouse. So no, I don't think everybody needs a life insurance policy in its which is a pure term policy. Only a person who has an income which is supporting the house. Now, there is a discussion always that you can buy an endowment, a money back, a whole life, ULIP policies. These are all mixed with investment. And I think that conversation has gone on for years across the world, whether you should buy term and invest the difference, or you should go in for a bundled insurance plan. Typically, the insurance cover in a bundled plan is very small. So it is usually 10 times of the premium only, right? So if the premium is 1 lakh, the family will get 10 lakh as insurance proceeds. But if you were to buy a pure term cover for an average 35-year-old, between 8 to 10,000 rupees would get you 1 crore of a term cover, a life cover, pure life cover. So I'm very heavily on the side of the debate which says that the principal breadwinner has to have a very large insurance cover, plus insure all the loans. And no, everyone does not need a life insurance. Everybody needs a health insurance policy.
Okay, that's very well put. I mean, very simply put as well. You need to have life insurance only if you have a dependent, if you're running your house, as well as if you have any kind of loan that, unfortunately, if you pass away, you don't want to leave your family behind with that kind. Everybody doesn't need a life insurance. Got that? I don't know if Sumit agrees to that, but Sumit, you want to come in on this? How is the situation right now, the life insurance industry, and how do you see people approach it over the next, say, 1 to 2 years?
So my belief, first of all, let me just react a little bit to what Monica said. I completely agree with Monica. I think she made a very valid point when she said health insurance is the first thing that everybody should buy. And nobody can really dispute that, because health is something which is recurring, and health issues, especially if you have family, chances are that if you're in a family of 4 at some point of time, sooner or later you are going to require it for sure. So there is absolutely no denying that health is something that any family should buy first. It should cover all members of the family, a float of cover or something like that. which covers all members of the family, is a very important part of what you should do for your financial well-being as a very basic step. I do also believe, however, unlike a little bit of what Monica said, I do believe life insurance, if bought early, especially term insurance, if bought early, can lock you in for lower premiums for a fairly long period of time. And so that's a significant saving that occurs over a fairly long 20, 25, 30-year period. So that is something that I think if you buy early, that's an advantage that you create for yourself. Also, chances if you buy it early are that you are in good health and you don't have any unnecessary extra premiums to pay because of that. So that's the one thing that I would recommend, that you should buy life insurance also relatively early. But yes, the right point is if you are kind of married, or if you have dependents, or if you have liabilities, like you also mentioned, Sonia, of loans and other things, then most certainly you should buy protection for sure. In India, and just going with what Monica said a little while ago, most covers are 10 times. But the interesting fact is that in India, about 1 in 100 people, 1 in 100 earning people buy life insurance in a year. And most people who buy insurance don't even cover one time their annual income. Yeah, so that's a very basically it's called severe underinsurance. So what is the right amount of life insurance to buy? Our principle always has been that anybody should look at between 7 to 10 times your annual income, so that if God forbid something was to happen to you, your family has enough cushion, money that they can invest and live off the interest and so on and so forth. So 7 to 10 times is what we recommend. Like I said, we have seen as an industry a lot of traction over the last 2-3 years. I think this whole concept of insurance as the bedrock of financial planning, and making sure that you buy insurance before you start, as Monica also put it, before you start putting money into investment, I think it's beginning to get understood a little bit more. Having said that, I must say that even some of my friends, people that I know reasonably well, we have to keep educating them about this all the time. A lot of people still have this whole thing of saying,
yes,
I want to buy life insurance, but I don't want to buy term because I won't get any money if nothing happens to me. And I say, yes, that is true. But what if something was to happen to you? And is 30,000, 40,000 bucks too much a year for this? You'll pay much more than that for your car. And your car doesn't have the same value as you do. So
Sumit,
how do you place value?
Yeah. Sure.
Sonia,
So, I want to come back to that point you made. I want to come back to the point you made about how much term insurance one should buy. And you said the right amount of life insurance is between 7 to 10 times your annual income. Now, we're getting a query. Arun Garg has written to us, and it's relevant to this point. He wants to know, how do you decide what is the amount of term insurance, how much is enough, and how to time it across different phases of your life? Monica, come in on this. What would your advice to Arun be?
Arun, if we start staggering according to every situation, we will have an answer which works differently for different people. So the one mantra, one formula is buy when you have dependents and or a loan. And like Sumit said, you buy 7 to 10 times of your annual income. You buy till the point that you're going to be financially free. If you understand the true purpose of life insurance, it is to take you and the family to the point at which your retirement corpus, you have enough assets so that your monthly salary check doesn't pay your bills, right? So the goal is that I need to be insured till my retirement. So typically what you have to do is offset the assets that you have. You will have gold or real estate, mutual funds, stocks. You take that as your net worth and keep adding the amount of insurance that you need to buy so that that number is enough for you to retire tomorrow. Okay, so that is the formula. So as I'm speaking, you will understand that as your income is going up, your requirement of life cover is also going up. But so are your assets. So it is almost every few years you have to check whether the amount of life insurance you have is enough or not, because the goal is that net worth, whatever your assets are, plus the life insurance corpus has to take the family, they have to live off it for the rest of their lives. So though if you get that basic principle, then you can apply it, everyone can apply it to their lives. So there is no one correct answer for that, Sonia.
Okay, got that. There are a lot of pearls of wisdom that you guys are throwing at me. So what I'm going to do is take a short break. So far, what we know is health insurance is the most important thing. Life insurance you only need to buy if you have dependents and or a loan, if you are running your house. So anyone and everyone doesn't need to buy life insurance. If you buy term insurance early, then you can score lower premium. So that should be your goal. And the right amount of life insurance to buy is between 7 to 10 times your annual income, and buy till the point that you will be financially free. All right, so those are some really important points, but we're getting hit with many queries on social media. So we're going to do one thing, take a short break and come back with lots more on smart money. Welcome back. You're still watching Smart Money on CNBC TV 18. We're having a very engaging conversation with two veterans in the insurance space to talk about what you should be buying and how much you should be buying in terms of health and life insurance. Monica, before the break, we were discussing that whether you buy life insurance or not, life insurance is not for everyone, but health insurance is a must. So let's drill it down to the specifics. How much health insurance should I buy, and what all should I look for while buying health insurance? Let's break it down one by one. First up, how much should I buy?
Sonia, the answer to that really depends on where you are. So we'll just keep it to the large Indian super metros. An average family needs a minimum of 25 lakh cover for, say, 4 people. Some people think this is too little, and we know of families who go up to at least 50 lakh of cover. So it really depends on how safe you want to feel, but I would say that a 25 lakh cover is very important. So that is one, that much cover you need. Smaller cities, surely you can get your lower value covers. What should you look out for? Health insurance, you don't go and buy the cheapest plan. In life insurance, we can still argue that for a pure term, it is, if the claims ratio is good enough, then it is fairly okay to buy a cheap term plan. It's a commodity. Do not make the same mistake in health insurance by shopping for the cheapest plan, because it's really the benefits and the costs that you have to see. Costs in terms of what is it that you won't get, right? So what benefits are you looking at? You're looking to see that there is, so health insurance has something called a pre-existing waiting period. So if you have a pre-existing disease, a lot of companies will make you wait for 4 years, which is the limit set by the regulator before they will start covering that, ensuring that. A lot of companies are saying that, no, you just wait for 1 year and we will cover your pre-existing. So look for that pre-existing. Look for no deductibles or copay. I can just tell you, Google these 2 words to find out what it means. Third is you should not have any limits on the room rent. Again, find out, really, this is a very important decision. Your room rent is linked to all other medical services, including doctor, including medicines. And if there is a sub-limit on room rent, even a very large policy will not pay, because they will cut out at that point. Yeah. So these are the few things that you need to look out for when you buy a health insurance policy. Of course, you have to look for a policy which is giving you a no claim bonus, which means for every claim-free year, the sum insured will keep going up. So yes, just very briefly, this is a whole masterclass in itself on health insurance, but very briefly, these are the 3 or 4 things which people need to look out for.
No, that's very important what you pointed out. I think a lot of people, sometimes don't even know the basics. So it's important that we revisit the basics, what to keep in mind. So you said in metros, a minimum 25 lakh cover is required as far as health insurance. You can take it up to 50 as well. And you put out those pointers on what are the things to keep in mind while buying health insurance. Very important over there. Don't buy the cheapest health insurance. Should cover pre-existing diseases, should not have a copay, should have a no claim bonus feature. That's important. We're getting a query from Mr. Pratyush Ranjan. So I just want to take that very quickly because it ties in somehow and it is a bit confusing. He says, if I and my brother have a family floater health insurance, both of which are covering my parents, Can we both claim insurance from the same company for the same person if the hospital expenses are on the higher side? Now, I know this may sound very simplistic, but we still need to iron out everyone's queries. Monica, what would your answer be?
Two different policies, even from the same company, for the same person will pay the amount of the claim. So example, one person's policy can pay, suppose the claim is 10 lakh and the two policies are for 5 lakh each, then one policy can pay 5 lakh and the other can pay 5 lakh. You'll have to make the disclosure to both of the companies as to what you're doing. Remember that this is insurable interest, which means only what you have paid you will get back. There is no benefit that you will derive. So you can't claim more than the total hospital bill. So the two policies together can pay your bill, but you can't get more than what you have paid. So the short answer is yes, you can use both, but you must disclose it to the insurance company that there are two policies, two people are paying the premium for the same family member, and you are going to be using parts of the two policy. Sonia.
Okay, got that. Sumit, I want to come to you on the point that Monica was making earlier about how in metros you need to have a minimum of 25 lakh health insurance cover, and perhaps it's good to even raise it to 50 lakhs. I don't know if people can manage that, but what is your view on that? And given this whole COVID situation where hospital bills are also mounting, there's talks of a third wave, what is the right amount of health and life cover that people need, health particularly?
So health, I would broadly agree with what Monica has said. I don't think you can disagree with what she said. I do believe strongly that 25 lakhs, if I go and look around, very few people actually have 25 lakhs, right? It's a good subject to talk about. Most people make the mistake exactly that Monica pointed out. They go in, they buy the cheapest health policy out there, and they don't worry too much. If I do a straw poll and, talk to 100 people, I think you will find almost 75 will have cover of less than 5 lakhs. Now, in today's scenario, really, it's just not adequate. You go to the hospital once, you're going to end up spending a lot more than that if you have something serious which happens to you. So 25 lakhs for a family of 4 is, to my mind, certainly kind of required. On the life side, as I said earlier also, it's a much simpler philosophy. 7 to 10 times of your annual income plus any liabilities, loans, etc. that you have to pay. All of those you should buy, and that philosophy really doesn't change. It doesn't change whether you are in a Mumbai or a Delhi or whether you are in a Ranchi. You can pretty much go with that same principle everywhere. Is what we recommend to our customers. That 7 to 10 times is certainly what you would look for in a life insurance cover, plus any outstanding liabilities that you have, loans, etc.
Okay, well, you know what, we have run out of time, but I can't tell you, we're getting flooded with queries right now. So I'm going to try and take this offline, or perhaps do another session with both of you just on the queries that we're getting. There's so much coming through. But thank you, Monica and Sumit, for at least putting together the basics for us and telling us why it's so important to get both life and health insurance, primarily health insurance, in these trying times. Thank you so much for joining us, and thank you to all our viewers for sticking by with Smart Money. Have a great weekend. We'll be back again next week.